Hi guys, welcome to your daily dose of dividend. Root made a request a while ago in the comments for MSCI, so let's take a look. It has a market cap of $35 billion and it operates in the financial data and stock exchanges industry. It provides indexes for ESG investing and different markets. And here we can see that it has outperformed the S&P 500 by quite a lot the last 10 years with its dividend reinvested. Let's take a look at some key fundamentals. First of all, the sales growth, incredible, 12%. We want over 4% here, so that's a check mark. Next up, it's earnings, and also here, astronomical earnings growth of 26%. Big check mark again. And the analysts, they estimate strong earnings also forward on, so 15% here, that's a nice check mark. The return on capital is also quite strong, over 12% here, actually 16%, so that's a check mark. The debt to free cash flow is a bit high. I actually have quite some debt compared to the free cash flow, but yeah, it's still under the threshold of 5 years, so a small check mark here. And they have been buying shares back quite a lot the last years, so check mark here. Let's take a look at some dividend data. The yield is going to be quite low, only 0.95%. It's quite common that yield is low when the stock price skyrockets like this. The dividend, even if they raise it a lot, it can't keep up. The payout ratio is quite low, 37%, so nice check mark there. The growth rate is very, very high, 30%. So if you are focused on growing your dividends, this might actually be a stock for you, even if the yield is quite low right now. And they've been increasing their dividend for 7 years. So that's actually an X. That gives MSCI 8 out of 10 points. For gurufocus.com valuation graph, we can see that they believe it's a bit undervalued right now. But what do you guys think of MSCI for your dividend portfolio? Let us also take a brief look at the valuation in FastGraph to see if it's a nice stock to actually buy right now. So here in FastGraphs we can see that it has really skyrocketed the last couple of years. It really took off 2017 from $100 up to over 600, but it has come down quite a lot, but it's still trading at a PE of over 40. So yeah, as a dividend growth investor, but also a bit focused on value, that is still terribly high. We can also take a look at the forecasting. And it becomes quite different if you compare it to its current PE or a bit lower reasonable PE. But let's first compare it to its normal PE. Still, I think about 25-30 PE is not reasonable for many investors. So, for example, if we're gonna estimate this maybe at the 27 PE, we can actually see that it's a negative on the total annual rate of return if we look forward to the end of 2024. So the stock has to come down a bit in price further on, probably, to make a good investment. But if you believe it can sustain this high price to earnings of about 40, you're still looking at a 13% annual return rate. But a bit slower economy and people and institutions may be saving up a bit on big investments. It could be quite risky to buy it at this high multiple still. So that was it, guys, for MSCI. Hope you guys liked it. If you have a stock request, please put it in the comments below, and see you guys next time. Bye.